Welcome to Financial Revelations, my peeps. As you will notice, I am not wearing my normal garb today. I am in a $100 bill tracksuit because on the radio this morning I went as Money Man, and I'm going to, look at this, ready? I am America. Thank you. So I had a mask on, I didn't bring that in here, and a cape that one of our clients, Lynn, made for us. Thank you, Lynn. And they were in awe of my garb. And I had even a meeting after radio, and I went like this. Anyway, it's all in good fun and to make people laugh a little bit and to enjoy talking about money. And that's what we do. We talk about money, we talk about politics, we talk about missions trips. Every Thursday morning, I'm on WCRF 103.3 in Cleveland. It's a great morning show. We do get a lot of questions answered. We had a ton of questions today. I'm on for an hour from 8 a.m. to 9 a.m. You can use the Moody Radio App to listen. Also, no matter where you are in the world, we've got an Amazon trip coming up in March, all scrolling right here, nativosusa.org. For that, you could support the mission trip. We got a full crew going, so they can't take anybody else with us. And then in May, there's another trip going. I'm not going to be on that. Also a full crew going. So there's a lot of interest in the Brazilian church. They're building a building down there. We're going to raise money for that. So this is the first Financial Revelations of 2025. Happy New Year, everyone. Welcome to the new year. The market's been a little rocky so far. Not a surprise, really, because we had such a good growth year last year. You go to January 1st, and now you can sell a stock that you have a gain in. So you take that gain. You don't have to pay taxes on it for 16 months. If you sell it in December, you got to pay taxes in 5 months. So a lot of people will move some positions in the first week of the new year. So I kind of expect that will settle down a little bit, but we got the big change of power coming up in just a little over a week's time. So there's going to be the inauguration of Donald Trump in Washington, D.C. I'll be there for that. I have tickets for it. And what I wanted to do, if you've listened to this podcast for more than like 2 seconds, you will know that one thing that you could not call me is nonpartisan. On the podcast, I do take a position politically, economically, and I'm not ashamed of that whatsoever. I would defend that with anybody. On the radio, I want to try and be as nonpartisan as possible because I don't know who's listening, and they're a 501c3, so they take a vow. They take 2 vows. They take a vow of poverty as a 501c3, and they take a nonpartisan position. So I wanted to bring some of that nonpartisanship here today to the podcast and just look at a nonpartisan approach to what we are seeing and hearing from the Trump campaign or from the Trump team. Because even though he's not president yet, he's meeting with world leaders. He already got the Prime Minister of Canada fired. Businesses are lining up behind him. So we're definitely seeing a difference between the first Trump administration and this Trump administration, in that instead of people lining up to oppose him like they were in the first time, they're lining up to be part of him in the administration. So much so that Facebook, now remember Facebook they've apologized for it too, and I'm going to take them at face value. So somebody apologizes, I'll accept their apology. Okay, they admitted they did something wrong. They said they weren't going to do it again. And starting around the pandemic, the Biden administration really pushed for social media platforms to censor people. If there was vaccine hesitancy, if there was vaccine questioning, if there were questions about where the virus came from, if they were questioning Dr. Fauci or Birx's motivations, the Biden administration would they would pick individual accounts. I mean, they're not saying, oh, just censor this speech. They're like saying, hey, you go after Dave. And Facebook did it. Well, they've apologized for that. And yesterday, they announced that they are stopping their fact checking, and they're going to institute a system that is more like what Twitter does, community notes. And so if there is destructive speech, or if there is hate speech, if there is misinformation, and they can't define misinformation, by the way. They can't even define a woman, so they're not going to be able to define misinformation. But the cure to that isn't suppression. The cure to that is more speech. That's how you cure those things. You get the truth out. You don't just stop it, because then you get things like martyrdom and conspiracy theories surrounding it. You allow more speech to flow, and it seems to be working anyway for Twitter, and I think other people are seeing this. So I found it interesting that a cartoonist, and by the way, I'm not in agreement with this, a cartoonist for the Washington Post, the paper that Jeff Bezos owns, did a very unflattering cartoon of Donald Trump and billionaires like Jeff Bezos kissing his feet and paying homage. They wouldn't take the cartoon. She quit. Okay? To me, well, it's his paper. He can do whatever he wants, but I don't mind as long as it's balanced, as long as it's like Saturday Night Live. When Saturday Night Live picked on everybody, it was pretty funny. When Saturday Night Live went woke and just picked on the right, it stopped being so funny. It's one of the reasons why, what's the cartoon, Corey, with Cartman? South Park. South Park is funny because South Park leaves nobody out. They can make fun of me. I think it's funny because they make fun of everybody. There's a stockbroker in South Park where they go to the bank and they invest money, and he takes the money and he hits a couple of buttons. He says, and it's gone. That's it. The money's gone. I can laugh at those things. It's not going to happen here, by the way. But so I wanted to take a nonpartisan look at some of the things that the Trump administration is talking about, that we can expect to see some of this. And the biggest one, of course, is tariffs. Now, tariffs if all you did was tariffs, they are inflationary. They do raise costs. So what you're saying is, I am not going to allow China to just ship stuff here without regard, and we're not allowed to ship stuff there. If you give us a 25% tariff when we send goods to you, we're going to give you a 25% tariff when you ship goods to us. I feel like you should see the eagle. So that's a tariff in a nutshell. And the whole idea that those economies over there, wherever over there is, whether it's China, Japan, Mexico, Canada, and the vast majority of Europe, the reason that exists is because of Bretton Woods. Bretton Woods was an agreement. We were coming out of World War II. We invited all the Europeans over to a place called Bretton Woods, New Hampshire. And they thought that they were coming over to sign away their countries because we had just saved them from communism and fascism. And they got there, and we told them, look, we cannot afford to rebuild every bridge that we just blew up and every industry. So what we're going to do is we're going to allow you access, free and unfettered access to our markets. And not only that, we're not going to ship to you. And if we do, you could charge us. So we set that regimen up as we're not at the end of World War II, just before World War II ended. We had not dropped the bombs in Japan as of yet. But Europe saw the writing on the wall. Everybody saw the writing on the wall that we were going to win this. And so we tell them this, and they signed the agreement in one afternoon. And on top of that, what we said is, look, you don't even have to build a military. We're going to construct a Navy that will protect the shipping lanes. And out of those agreements, you get Europe and really most of the world builds an export-laden economy. Their entire economies are built on shipping stuff to the United States. Okay, because they needed money to rebuild, to put people back to work. And this was a favor to all of us at the time, because when people are working, they don't get compelled by socialism. When people are working, they don't get compelled by communism. They're working. We got things pretty good. Why would we ruin it with this junk? It's when people are out of work and the unemployment rate's at 25% that socialism looks pretty good. Because there's always some people in your economy that are going to be uber wealthy. They're in In socialist economies, it's government officials because they get all the graft. Did you know that in Ukraine, right now, the finance minister of Ukraine, I don't know what a finance minister makes in Ukraine, but our president makes $400,000. So whoever the treasury secretary is, he makes less than that, or they make less than that. The finance minister in Ukraine bought the very first in the world, all electric, 4-door Bentley. It's $600,000. That's what the finance minister in Ukraine, where do you think he got that money from? Well, yeah, he stole it. I have no doubt that it's stolen money. It's misappropriated funds that we probably sent there. That's the way socialism works. Government officials get rich. People who know people get rich. The average person, they basically starve to death. So that is why they had tariffs on us and we didn't have it on them, Bretton Woods. So the idea that Bretton Woods still needs to exist is a spurious argument. They have mature economies. They don't need to do that to us. In fact, they would be stronger if they allowed the free flow of goods and services across borders. That was one of the whole things that the EU was bent on. You didn't have to stop at the border and exchange currency. You didn't have to stop at the border and show your passport. It's the EU. You're in. Except for when it came to the United States. So Donald Trump is trying to get in the way of that and break the last vestiges of the Bretton Woods Agreement. And we do that through tariffs. And again, tariffs on their own, they are inflationary. They'll take cheap goods and they will stop them or increase their price, and now you're going to pay more. The end user pays the price for all of this. So the thing is that I think a lot of the talk about tariffs is also negotiating. It is putting economic pressure on people to change the way that they do business with us. Some of them probably will not go into force. Some of them will. And the way you offset those things, so if you're going to do tariffs, if that's going to be your regime, if you're going to do a tariff regime, you have to do other things to offset the inflationary impact of a tariff. And it's the one thing you do not hear the press talking about because they don't understand economics. If you want to know economics, there's a book called Basic Economics by Thomas Sowell. It's part of my book club. Get the book, Basic Economics, Thomas Sowell, or read Walter E. Williams. These are two of the greatest economic minds that are currently in existence. And not only economic minds, but capitalist, free capitalism, Art Laffer, Larry Kudlow. These are all people that have been around economic circles for a long time, and they haven't been corrupted by the left. So the tariffs, if we just implement tariffs, we're going to have inflation. So what we need to do is free up oil and gas, make our energy consumption far cheaper. So what you're doing is, early on, this doesn't really help oil and gas companies because they're selling the same amount of product for a cheaper price, so their profits kind of go down. But what happens is, very quickly, after energy prices drop, very quickly markets start to expand. And so in that expansion is where the profit margin is. So yes, you are selling your energy at a lower price. Doesn't necessarily mean it's a lower profit margin, especially if it's regulations that are lifted that bring the price down. So you can still have the same margins, but you're getting an expanding market. You're selling more product to more people, and it's growing. Okay, so if we do find ways to increase our capacity to drill for gas, to drill for oil, and refine those products into usable products, you will see markets expand. That is a huge offset to a tariff price increase. Huge offset. That's one of the things that could bring prices down. Now, the third thing that I want to talk about is what we would call the New Green Deal. Now, renewable energy is here to stay. It's not going anywhere, and it should stay. I don't really love windmills. I don't think that they're not cost effective. If you go out to Rancho Cucamonga, it is a real place in California. There's an outlet mall there that my wife found. But I think she found an outlet mall just about anywhere she goes. But if you go out to Rancho Cucamonga, There are windmill farms out of there. If you go from San Francisco and drive to Yosemite, you're going to drive through windmill farms. I personally think they're a blight on the environment. They cost a ton. They have to be serviced. They use hydrocarbons to run. The average windmill, one of those big windmills, it's like 180 gallons of oil to run that thing. And it has to be changed. And the amount of cement. So if you listen to a global warmist, they will talk about cement and how it contributes to global warming. You would be astounded at the amount of cement that goes into anchoring one of those big windmills. I mean, think about what's happening, all the energy pushing from side to side. That thing should be ripped out of the ground with the waving that it's doing. It's not, because of all the cement. So I think what you're going to see is you're going to see implementation of EVs kind of slow down a little bit, until which time, if they find a way to increase the battery capacity and lower the charging time. Right now, they're not really competitive for most people to drive versus an ICE vehicle, an internal combustion engine. But at some time they might. But until then, I think you're going to see some of that EV implementation slow down. I think you're going to see us focus more on things like nuclear energy, which is in vogue again. I can remember 3 Mile Island. 3 Mile Island melted down 3 days after they turned on that reactor. 3 days. We don't build them like that anymore. They're way safer. I've seen nuclear power plants that are like the size of a Subway, the restaurant. There's one in Vero Beach where you drive by. It's right next to the road. You wouldn't even know it's a nuclear power plant. It serves about 250,000 households. So they have a very small footprint. So I think you're going to see some of that. Also, that brings down inflation, because energy derived from New Green Deal stuff, from solar panels, from wind, from hydro, from whatever else they're doing, is super expensive. It's not even comparable to natural gas or nuclear. The biggest cost in nuclear really came from regulation. Now, we should be regulating nuclear power. I'm not against regulation. I would be for something that I would call smart regulation. Get the power plant built, make it safe, scale them down. You don't need the big cooling towers anymore. And if you did those things, by ending the New Green Deal, you bring down inflation. So we have one inflationary thing in the tariffs, and we're talking about the things that we're going to do, or that Trump wants to do, that would be anti-inflationary. Actually bring costs down. When we had inflation that peaked out at about 9.5%, everything rose in cost. Okay, the growth of inflation now is down around 3%, but those prices are still up there. Corey, when you go to the grocery store, is things still as expensive? That's right. So Corey keeps demanding raises. I can't afford her hardly. She's expensive. The next thing is tax cuts. Now, when you hear somebody talk about tax cuts, the first thing the press will say is, well, what is this going to cost us? The best way to keep the government from spending your money is never give it to them in the first place. Art Laffer, the inventor of the Laffer curve, which was the basis for trickle-down economics, said, if you don't know where you're at on the Laffer curve, it's an axis, okay, an X and a Y, and then kind of like a quarter of a circle. He says you don't really know where you're at on the curve at any one time, so you got to tinker with the numbers to figure out where you're at. Last year, we took in more tax receipts than ever in history. And that was because we had tax cuts. And you say, well, Dave, that doesn't make sense. You cut the price and we took in more money. Yes, that's exactly right. Because what happens is you lower the cost of a capital gains tax, for instance. People will move that money around. Like, now I can unlock this money, so they pay tax on it. So what you do by lowering taxes, you lower the tax rate and you increase your tax receipts because you're encouraging economic activity. Lower taxes, lower spending. The Doge Committee, also anti-inflationary. Whenever you take money out of the hands of the government and you put it in the hands of private citizens, you are encouraging, you are steering away from inflation. I don't want to use the word deflation because that's insidious also, but it's anti-inflationary. That's exactly what it is. Governments create inflation. People don't. So governments create inflation how? They flood the market with money. That's what happened in 2020. The Inflation Reduction Act, there was the infrastructure bill, flooded the market with money. It was mainly a Green New Deal bill. And we got inflation. They said it was transitory, and we know now it wasn't. And, just pointing out that inflation, that 9% inflation happened 3.5, 4 years ago. Now, it lasted for a while, so I would say that the really high rates ended 2.5 years ago. That's what people voted on. People remember that, and people know that things are expensive. I know that things are expensive. I was just at Costco yesterday. I bought a brisket because somebody talked me into having a party Friday night for the Ohio State game, and I couldn't believe how expensive it was. So tax cuts are anti-inflationary. Growth in the economy is the most anti-inflationary thing you can do. Economic growth, economic expansion of our markets here domestically, all anti-inflationary. So interest rates will be coming down. Now, I know the 30-year mortgage right now is just at about 7%. The bond market is mad at the Fed right now because the Fed did this emergency rate cut of 50 basis points right before an election. It was political. I think Chair Powell should be fired. In fact, we changed his name to Chair Fowl as an F-O-U-L. That was a foul. And now they're talking about not even cutting rates this meeting. That tells me it was all political. It's all I need to know. So that, once we start lowering interest rates, that's also anti-inflationary, and it leads to economic growth. And when you get economic growth, you can afford to cut taxes and you can afford to spend less money because everybody's working. There's a very simple philosophy that when you get economic growth, you push people out of government. Not because you're mean or you think they're useless. There's a lot of good people in government, of course, and they do things that we need. But it's bloated. There's no doubt about that. Every except for my place here, every other place is bloated. They could do away with people. I don't think we could do away with anybody right now. And it's not going to be Corey if we do, so don't worry, Corey. She knows where the bodies are buried. If I'm going down, I have to take Corey with me. So you push people out when there's economic growth so you can bring them back when you need to. Like if there was a big recession or, another 2008, which I don't see happening right now, but it doesn't mean it couldn't happen. So the rest of the world is looking at us. They're kind of bending the knee at Mar-a-Lago. We don't need to invest overseas right now. I'm not saying not to, but I would be very gentle with, I'm not putting any money into Europe right now, or China, or Japan, or South America. I have it there. I'm leaving it there, but I'm not adding to those positions. I like to say we're the cleanest dirty shirt in the laundry. Things aren't perfect here. They never will be, but this is the place you want to be. You want to invest domestically. You want to go large caps, maybe some mid caps. I think you could ignore small caps for now until interest rates come down. Remember, small cap stocks are not really small companies, but they're smaller than like Walmart or Meta, Apple. They are very interest rate sensitive because they borrow a lot of money. So when interest rates are higher, they tend to perform a little bit less because they just don't have the same profit margins. And I still love tech. I love tech. I love big cap tech. I love mid cap tech. I love AI implementation. I think we're at the very forefront of some of this stuff, and I think it's going to be good for us long term. Now, in the short term, there's a lot of volatility. There always will be. There always has been. So you got to think long term when you invest. We are longer term investors. People will call me and they'll, from, whether it's a media appearance or something, they'll say, do you have any hot stock tips? And I just say, buy low, sell high. That's my tip. If you could do that, you probably make money. The markets are up about 81% of the time. So it's a pretty good risk to take. A lot of people, after a couple of good years, say, well, we're due for a downturn. Well, it may be true. It may be true. When it happens, buy more. That's been my philosophy, and it has served us very, very well. I am David Safransky, a real American, the original OG, a true red-blooded American, and the voice you could trust.